Assalamu alaikum wa rahmatullahi wa barakatuh. You are about to waste the next 5 years paying rent, all because of one single lie you believe about halal mortgages. They've told you the fees are too high, the process is too complex, and that they're basically just Riba with extra steps. That's the $300,000 lie. The truth is, the entire notion that halal mortgages are just a hidden form of Riba has been deeply embedded in your mind. You've been conditioned to believe that renting is the only viable option. But here's the twist. Renting is going to cost you more in the long run than purchasing a home through a halal mortgage. I'm here to show you the exact 4-step blueprint to find a truly Shariah-compliant home in the US or UK and save you tens of thousands of dollars in hidden fees along the way. Don't click away. Your home ownership journey starts right now. The LIE versus the fact. The $300,000 lie is simple, that Islamic home financing is too expensive. The fear comes from a misguided notion of double taxation. They don't tell you that the Islamic system is designed to work in your favor. Instead of paying interest, which is what you're doing with a conventional mortgage, you are paying rent and acquisition. Here's the fact. Because the Islamic model is classified as a joint purchase or lease agreement, diminishing musharaka, most Western legal jurisdictions, including the US and UK, offer statutory or specific tax exemptions. The fees are typically paid once, just like a conventional closing. In other words, you are not paying extra fees. You're just paying someone else's mortgage when you rent. It's time to pay yourself. The 4-step blueprint. Step 1, save the 20% deposit. This is non-negotiable. Not only does it secure better terms, but it immediately increases your ownership share in the musharaka model. The higher your share, the lower your monthly rent payment. This 20% deposit is your key to control. Step 2, understand the co-ownership. In diminishing musharaka, the financier, guidance, al-rayan, etc., is your partner. They own 80%, you own 20%. Every payment has 2 parts, rent for the bank's share and acquisition to buy back their shares. This is where the magic happens. Your payments help you increase your ownership stake, and as your percentage increases, your rent decreases. Step 3, vet the Sharia board. Not all halal mortgages are created equal. The integrity of your financier matters more than anything. You must ensure the provider is audited by a reputable third-party Sharia board. Look for names like the IFSB or AAOIFI. This is the difference between permissible and doubtful. Step 4. Lock down your rent formula. This is crucial for comparison. The profit rate is pegged to the prevailing base rate, which is why it looks similar to interest. However, the key difference is that your rent is based on the bank's share of the property, not the principal. You need to know exactly when and how often that rent can be adjusted. Now for the trick they don't advertise, which can work in your favor. Base rate flexibility. When the market base rate drops, your rent is often adjusted down quickly. But when the base rate rises, they can delay or limit your increase. Understanding this mechanism is crucial to keeping your payments affordable. Before you sign anything, there are 3 critical questions you must ask your lender to ensure the contract is fair and riba-free. Question 1. What is the penalty for a late payment? If it's anything more than a fixed, nominal charity donation, walk away. Riba cannot be charged on late payments. Question 2. If the property is damaged, who bears the insurance cost? The cost must be split proportionate to the ownership share, 80% bank, 20% you. You must not shoulder more than your share of the risk. Question 3. Is there any prepayment penalty for paying off the principal early? A true partnership allows you to acquire the bank's shares at any time without punitive fees. If they penalize you for an early payoff, walk away. You now have the full blueprint. Stop letting the fear of the $300,000 lie hold you back. Homeownership is an investment and a vital part of building an ethical legacy. The minimum deposit is 20%. And if you're thinking, where am I supposed to save that 20% deposit without earning Riba? That's the next problem we solve. You need a specific Riba-free savings account, not just an investment account. We've done the research for you. Don't let this lie hold you back. Start your journey toward homeownership today and build a legacy that's financially sound and ethically compliant. Jazakumullahu khairan.